Well, hello everybody. Can you hear me? Microphone checker, microphone checker. Just need one person to tell me it's working. Good. We're good to go. All right. First and foremost, I do want to thank you guys for showing up. I also want to tell you that I'm sorry because I stayed up way too late and drank way too much last night. Thank you, Silverback. I know you're not here because you're responsible for keeping me up so late and so much drinking, but you're not here this morning. I'm sure of it. With that said, for those of you who did make it, thank you. Today's topic, if you don't know, is going to be about trade plans, why and how. So basically, we're going to talk about why trade plans are important, why they're necessary for what we do. And I truly believe that they are absolutely a part of becoming a successful day trader. Now, the other thing is with trade plans is that once you become successful, which I hope you all do, you will not need to be as diligent on some of the points that we're going to talk about as far as the trade plan goes. Good morning, Emil. Oh yeah, dude, it was, I'm sorry. I'm trying to drink my coffee and get some of the tequila and the Jameson and the beer and everything else out. But, you know, with that, I'm a human just like the rest of you guys. I try to live life on the edge, if you will. But with that said, what we're going to talk about, as I just said, and I'm not going to take too much of your time, guys. This doesn't take terribly long, unless we get into a nice Q&A at the end. But at the end of the day, these sessions here are intended to touch base on things that never get talked about in the YouTube world when it comes to trading, the psychological side of things, and what really makes this business so difficult. It's not the it's not the technicals. It's not the strategies. It's our feelings. That's what makes it so hard. And having a trade plan, a proper trade plan, absolutely cuts back on a lot of the feelings that we feel when we take our trades currently. So as always, we're going to define what it is that we're going to talk about, and then we're going to touch on some bullet points about the hows and the whys when it comes to trade plans. So again, thank you guys for coming. Let's get started. Good morning. Good morning. And I'd love to say good morning to every one of you individually, which is part of my trade plan every day. But I can't because I'm trying to value your time. With that said, what is a trade plan? Why do we need them, and how do we make them? So a trade plan should define everything that relates to your trading day. Now, some people will say a trade plan only relates to their trade specifically. I would say that your trade plan should be a daily routine, if you will, right? So a trade plan should define everything that relates to your trading day, starting with your strategy and ending with the review of your trading day. We're going to talk about all these things that should be a part of your trade plan, and maybe you do some of them, maybe you don't. But I think that if you guys, and this is an important point, there are so many people that want to do trading as a source of income or to replace their main source of income, but they do not treat it like a business or a job. Guys, I come onto the microphone every single day. We have a good time in our room, but I still treat it like a job, because at the end of the day, if I don't treat it like a job, I will never respect it enough to allow it to pay my bills. Okay? There are people who complain about the length of my videos. There are people who complain about the things that I talk about. And the fact of the matter is, in a sense, I wish I could make my videos shorter, but at the same time, I am trying to be extremely particular about what it is I am trying to share with you in those videos. If trading is not a serious thing for you, then you don't need to watch my videos or be in these chat sessions, guys. But if you're really interested in learning how to do this, it does take time, it does take dedication, and it will require pain and energy and effort on your side. Okay? So sorry, but not sorry about my lengthy speeches about things. I figured out how to do this. I'm trying to teach other people how to do it, and that's the point of these videos here, these live sessions, and the videos I make at night. But not to digress too much, we covered what a trade plan is. So one more time, a trade plan should define everything that relates to your trading day, starting with your strategy and ending with a review of your trading day. So what should be included in a trade plan? Okay, number one, essentially think of it as a rule book, right? That helps you define the boundaries for what it is you're about to do. We have these things. You have rules in sports. You've got rules at your job. You've got rules when you drive. You got to have rules when you trade. Okay, this is serious business, right? Because if you don't, just like if you break the rules when you're driving, you get hurt. Or break the rules in sports, you get penalized. You break the rules in trading, sometimes you get rewarded, just like if you speed too fast, you don't get a ticket always. But at the end of the day, it's going to catch up to you, okay? So a trade plan should include your strategy. You have to know what your strategy is in order to create a trade plan. It doesn't have to be my strategy. It can be any strategy. But what you have to do is define what the basis of your trade strategy is. And it should always be something that suits your personality. For me, I find that staying in the market time-wise is more of the time factor is more of the problem for me. It's not the position size, it's how long I'm staying in the market. I believe that's the ultimate risk, especially in an unknown, volatile market, right? All of you have been in winning trades that have turned massively against you out of nowhere. I know you have. If you've been trading for any length of time, especially since the beginning of this year, you've been on the wrong side of what we call an FU candle. One of those candles that come out of nowhere and they just tear in the opposite direction of the trade we're in. And that's unfortunate, right? You can't plan for those, so that's not part of this talk, but you need to know what your strategy is. So the second point is part of your trade plan should include risk management, okay? You got to know where you're going to get out on the good side and on the bad side of trades. Also, we want to maintain emotional discipline. And the reason that a trade plan is super important is because you can keep your discipline more in check with a plan. Why? The short version is because you've defined what you're willing to accept as a win, what you're willing to accept as a loss. And as long as you stay within those parameters, there's no surprises. You'll be just fine. If you deviate from those rules or your trade plan, then we're flying by the seat of our pants, and that's when emotions really crank up to a level 10, okay? Lastly, part of your trade plan should include clear profits, targets, and stop losses, right? You're defining the best case scenario and the worst case scenario. Now, why are trade plans essential? Why are they essential to trading? Number one, it will provide a form of consistency, okay? It keeps you structured, if you will. And because of that, it should, not always, we're emotional creatures, it should reduce impulsive decision making, right? That's why I tell you guys all the time, for those of you who are in my Discord community, or for those of you that are watch my videos, you've heard me say it. I know you have. It's no trade should ever sneak up on you. And I believe that. Sometimes we find ourselves in trades for no real reason other than it's moving really quick, really fast in one direction or the other. That's not a good trade to take. How many of you have been in trades just like that one, only to have bought the proverbial bottom or the top? You've jumped in a move that already happened, and you seemingly somehow time the top or the bottom impeccably. Like you couldn't have done it on purpose better, but we've all done it, right? So consistency comes out of having a trade plan, as long as you follow your trade plan. Touching a little bit more on the end of that particular point is objectivity. Again, it helps you remove emotions from your trading decisions. It's a fact of the matter. This is why I focus so much on learning how to spot trades worth taking and how to spot trades worth skipping. With a proper trade plan, and why it's essential, is you can track your performance. Necessary. Again, everything that we do in trading as a day trader, it's not all fun and games, meaning it's fun to win, but winning doesn't come quickly and it doesn't come easily, right? It takes effort. It takes work, guys. So you got to track what's working and what's not working. You have to analyze what you're doing, okay? The other thing that comes with and why a trade plan is essential is risk management, right? So again, you're going to define your maximum position size, your wins, your losses, and you keep yourself together, all right? And then lastly, for why trade plans are essential is clarity, right? It reduces stress by eliminating your decision-making on the fly, right? Flying by the seat of your pants. It's not a good thing. It doesn't work well most of the time in trading. It does work sometimes, but not always. Now, how do we create a trade plan? This is the part that some of you think you know all of, and I would be willing to bet that for most of you who do day trade, you know most of the points that we're about to talk about, but probably not all of them are part of your trade plan. And more importantly, I'd be willing to bet that most of you, unfortunately, don't even have a trade plan. And if you could start by at least creating one, you're probably not going to follow it right away, but I assure you, things will start to come into confluence, yes, if you watch a recent video, with your goals, right? You want to make money. You know your strategy. You gotta, everything's got to work together in order for this to be a sustainable source of income for you. Okay. So how do we create an effective trade plan? As I touched base before, number one, you have to define your trading style. You have to pick a trading style or strategy that suits your personality and your schedule. That's something we don't talk about a whole lot, but it's 100% necessary. Some of you have day jobs. Most of you have day jobs, and trading is, well, a secondary thing for now, right? You're hoping this becomes your primary job, but at the same time, you still got to pay your bills with consistent income. And for most people, trading is not the consistent income. So your trade plan has to define both your trading style and your schedule. You also, part of your style, there's only a couple of different trading styles, right? You're a scalper like me, or a day trader, kind of like me. I think day traders hold their trades way longer than I do. Or you're a swing trader. It doesn't really matter what it is that you are, because a trade plan is necessary 100% of the time. Now, investors, for the most part, don't need a trade plan. You buy and you hold it for 20 years, and you'll have a lot more money than you did 20 years ago, 20 years later. That's just the way it works, as long as you're buying decent companies, right? So for my investors out there, this is kind of not your shtick, if you will. This is just more for my short-term traders, specifically as it relates to us, day traders. Number two, you've got to know what you're trading, right? You guys in my community, you know, we have futures traders, we have options traders, we have stock traders, we've got crypto traders, you've got Forex traders. I mean, there's a million different things out there to trade. That part doesn't matter, but you still need a plan no matter what it is you're trading, and what you're trading should be a part of that plan. When I first started, I used to set up watch alerts and things like that. And every time something would break a certain percentage to one way or the other, I'd go run over and check that ticker and try and get a part of the trade. Guys, the reason I focus on SPY IQs and anything related to that is simply because SPY IQs move every day, and they move a lot. You don't need to overwhelm yourself with chasing down tickers all day long. Try with picking one and refine that. Once you get good at that, then by all means, start chasing, runners and whatever it is that you're going to do. Number three, part of your trade plan is defining your entry criteria. Now, I'm going to take another drink, and I'm sorry. This is one that a lot of people struggle with, and it's super important. The point of my call put scenario, guys, that I share with you for my Discord members in the morning is I'm showing you, to the best of my ability, that you can and you should always be able to define the reason you're taking a trade. If you're ever getting into a trade and you don't know why, other than it's moving and your emotion said, yes, buy now. Bad. That's very bad. The call put scenario doesn't work 100% of the time, although I'm being told it works. What was it? Fibs, are you out there? 94.7, 95% of the time. Now, that is an aggressive strategy, but it basically revolves around breaking support and resistance levels. That's it. There's nothing special to it. It's just what it is. But the point is, I know that if I cross this line, or if I cross this line, and this over here is doing a specific thing, and that over there is doing a specific thing, I'm taking the trade. I'm defining my entry point clearly, so that if those things align and it comes true fruition, I can get into the trade. And I'm not going to hesitate. I'm not going to wait. It doesn't mean it's guaranteed to win, but that's a different thing altogether. It just means that everything I wanted to see to feel comfortable putting my money at risk has happened. I knew what I wanted to see. It happened. I'm taking the risk. Simple. 100% necessary as part of your trade plan, guys. because you're prepared, you're waiting, you're ready. Okay, there's no sneaking up on you. The trade should be open, just ready to send it for my day traders out there. Okay? The third, or part of the establishing the criteria also may include not just support and resistance. Not everybody's a support and resistance trader. I am, as I believe support and resistance runs the entire market. I mean, besides buyers and sellers, but buyers and sellers create support and resistance. Some of you trade based off of technicals, right? Indicators, RSI, moving averages, MACD, whatever. And that's fine too. You should still use those things as part of your trade plan to define your entry, always. Whatever it is, guys, I'm not trying to convert you into trading my strategy. I'm trying to teach you what is necessary on the emotional and the psychological side of this business to make you at least stand a chance of being potentially profitable in it. That's my whole reason for existence on YouTube. It's not the membership fees from Discord. I don't get paid shit from YouTube. It's trash money. I truly want you guys to be able to do what I've been fortunate enough to achieve. I'm not rich. I get to pay my bills. Doing something I love, freeing up a lot of my time. That's what trading has provided me. Not a brand new boat, not a mansion, not a beach house. Not a jet or a helicopter. It's provided me the ability to pay my bills without stressing out. And I do it in an hour a day instead of 8 hours a day. To me, that feels like I'm wealthy. I don't make $1 million a year. I'm not even close. Getting closer, but it's because I'm getting better as a trader. With that said, the third point about, auto pay. Being able to put your bills on auto pay without checking to make sure you can afford it is where I feel I made it. That was for me what solidified in my world that I've made it as a trader. That's it. Not a dollar amount. It's what I was able to do, which is something I never thought I'd be able to do. But we're not going to digress too much. If you're a pattern trader, right? Some of you guys pay attention to head and shoulders, double tops, double bottoms, all of these things. Again, part of your trade plan, defining your entry criteria. It's indicators, it's patterns, it's support resistance, whatever it is. Volume, some of you trade volume, which is the only indicator I would ever consider using myself aside from support and resistance. But we're trading the most highly traded tickers in the entire stock market when we trade SPY or futures or Qs. So I'm not worried about volume typically. And for a different topic, you can absolutely tell when volume's low without knowing with an indicator that volume's low. Okay, so what we've just covered is defining our entry, which is one of the first things you have to have for a trade plan. The next thing we have to talk about is defining your exits, right? What's going to get you, so you've figured out what's going to get you into these trades. Now you have to know what's going to get you out of the trades, right? On the good side and the bad side, because every trade is going to result in either a win or a loss. Now, for the new folks out there who are trying to learn how to trade and are afraid to hold their winners to their parts, to their expected profit target, break even is sometimes an option too. And yes, I'll get into that 1 second, JW. Or you can just take notes. I'll go down and just give you a quick bullet point of what the trade plan should include. But yes. Defining your exits, right? So whether it's a specific dollar amount, which I did for when I first went full time, I was looking to make $100 per contract per trade. I didn't care where I expected the price of SPY to go or SPX. Wasn't looking at a percentage return. For me, when I first started, I needed to lock in profits because I had bills to pay. It's not the best way to do it, but that's the way I had to do it because, well, it was the first time in my life since I had been working that I didn't have a normal, consistent source of income. So I was terrified. And that is something you cannot plan for. So if you're trying to figure out how you're going to be able to deal with the stress that comes with knowing that if you have a bad day at work as a day trader, you might not be able to pay your mortgage. The only way you're going to ever feel that kind of real pressure and real stress is if you're in a performance-based job or if you're a day trader. That is a whole different part of the equation. Again, different topic for a different video. But define your exit strategy. Whether it's a profit target, you have to define it on the stop side of things. So if the trade, everything lines up, you followed your entry criteria, it doesn't make it to where you want to and it goes the other way, where are you going to get out? You got to protect your money, guys. Yes, you're going to take losses as a trader, and that's acceptable and normal. Nobody has a 100% win rate. Nobody. So when on the occasions that it doesn't work out, you got to know where you're going to stop the bleeding, right? That's a stop loss. Trailing stops. Some of you have a hard time holding your winning trades to their projected profit target. It's not a dollar amount. It's a level on the chart. As far as I'm concerned, we know where we should have if we're in calls, we know where we should be expecting to go. And we should expect that when we get there, there's going to be opposition, right? If we're buyers, we know where the sellers are, guys. That's what support and resistance is. That's why it's king. You know, it's like they can't hide from you. They're not hiding in the shadows. Now, every once in a while, you'll find that you're on your way up to a known level of resistance, and out of nowhere, we don't make it there. And that's fine. But that's where trailing stops come in. So what I tell a lot of people is once you get into a trade and you've made it into profit, 2, 3, 4, 5%, if you have a problem holding your winning trades long enough, put a stop loss at break even and take your hands off the keyboard. Okay? Let it continue to go and remove your need to do anything with that trade at that point. There's nothing more comfortable than being in a trade that cannot lose you money. It's an amazing feeling. For those of you who are out there that do practice this particular type of thing, it is a form of a trailing stop, right? And again, we're not going to get into the technicals of what exactly is a trailing stop loss or, that kind of stuff. But if you know, you know, and if you use them, you already know what I'm talking about. And if you don't, look them up. Trailing stops are a great way to remove a lot of stress that you might currently be dealing with. Okay. Another exit strategy is time. It's not my favorite thing, but a lot of people will get out of a trade simply because they gave it a certain amount of time and they've reached that time and it's either done what they wanted it to do or didn't, right? For me personally, in markets like we're dealing with right now, time, as I mentioned before, is my scary thing, right? I'll be in trades, and if it's not doing what I hope it's going to do quickly, I start to get nervous, not because of a money thing, but I'm more worried that out of nowhere, I'm going to get a big candle that's going in the opposite direction. That's an emotional thing. That is something I need to work on as a trader to get better, but you've all seen it and you know exactly what I'm talking about. So defining your exit strategy. The next thing, determine your position sizing. 100% necessary for your trade plan, guys. Everybody is learning to try and day trade. And when I mean everybody, I mean physically everybody. Everybody who's here, who's in my Discord community or who watch my YouTube videos, you're there and trying to learn how to make this a source of income. Maybe not your only source of income, maybe not your main source of income, but nonetheless, your source of income. You do not have the right. You could do what you want, but in my opinion, you don't have the right to play a large position size until you've created a level of consistency. It's the quickest way to lose money. It's the quickest way to lose money. If you come into the stock market trying to make money first, but you don't know how to do it at all in the first place, meaning think of the ridiculousness of this, right? That'd be no different than you walking out onto an NFL football field for tryouts, having never played football in your entire life, expecting to get paid an NFL player's salary without knowing how to play football. Imagine that. That's the same thing with trading, guys. You have to play small while you learn. You have to. you will lose your money so quick, and worst off, you will lose all of your confidence if you don't learn how to do this properly. Okay? So determine your position sizing first, because if you play too big too fast, the numbers get big really quick, good and bad. And when it goes against you while you're playing a position size you're not really supposed to be playing yet, you're going to get yourself into a panic mode, and you hope that you can follow your exit strategy for your trade plan. Okay. And some of you scale in and out of your trades. That could be part of your position sizing plan. I personally don't. I play 5 contracts. If it's good enough to get in and I'm willing to sell half of them, why would I take half off if I truly believe it's got more room to go? Doesn't make any sense to me. People do it all the time. They'll scale in or scale out of their positions. My trade plan does not allow me to do that, right? I get in with 5, I get out with 5. The trade is over. I get in, and when I sell out, I have nothing else to worry about for that particular trade at that point. Good morning, Papi Chulo. Look at the guy who kept me out too late, drinking too much, just showed up. What's up, Mikey? Another important point. Trading journals. Now, guys, this is the problem that most people have for a long time. I didn't keep one myself. Because I started to keep one, I learned things that made me become a more profitable and consistently winning trader. There are softwares out there for doing this for you if you don't want to do it yourself. But your journal should include at least your entry and exit points, how you were feeling when you took the trade to begin with, and how you were feeling during. So your emotional state, we'll call it. Take screenshots. Take screenshots of the chart when your entry point was, when your exit point was. Okay, and this all matters at the end when you're going to do another part of your trade plan, which is the reviewing of your day. And take notes on what the market conditions were, right? Were you buying your calls and puts or your positions while Jerome Powell was talking, or Donald Trump was sending out a tweet, or China was bombing Japan, or whatever, right? Or was no news going on? You have to know what's going on in the market, right? We don't really pay attention to the news very often because, well, we find out the news when it's already happened and the markets move before we can do anything about it. So it's not like beneficial, in my opinion, to actively watch the news. It's nice to know why a big move happened one way or the other, but with that said, those are what should be in your trading journal, right? Your entry and exit points, your profit or your loss, your emotional state, how you felt during the trade, leading up to the trade, and all that stuff. Take screenshots, right? Screenshot of the chart when you got in, screenshot of the chart when you got out for review later on in that same day, and take notes on the market conditions, right? Number 7, and this is the last point of a trade plan, right? Include a daily routine. Now, this is something that I have realized I do, but I never talk about. Now, for the people in my Discord community, you know exactly what I do, my routine is, and you know what it is because I do it every day, consistently. My routine, but what your routine should look like, it doesn't have to be the same as mine. So let's just touch point on what that routine should include, right? Your market analysis. For me, I get on to 8:30 every morning. Every single morning that I'm trading, I am at my computer at 8:30 a.m. Eastern time, 1 hour before the market opens, and I mark all my support resistance lines. That's part of my routine. On top of, I don't do that without having my coffee in my hand first, right? So coffee, and it extends beyond that, but you guys don't want to hear about, how I wake my kids up, feed them, take them to school. Then I come back, get my coffee, and start my trading routine. Charting for me at 8:30. Another silly part of my routine, which is one of my favorite parts of every day, is going and saying good morning to every individual member in the trade room with me. It's weird, but it's what I've come to be as part of my routine. It's one of my favorite parts of every day. If I don't get to say good morning to all of my people every day, just things feel off. And I'm sure you felt it, maybe not in the same capacity as far as that's what causes you to have your off day. But how many times have you forgotten to bring your coffee to work with you? Or how many times have you, you have a phone call that you make every day on your way to work, right? Maybe it's with one of your siblings or your children or your spouse or whatever. And for whatever reason on this particular day, you don't make that call because of a meeting or whatever the case is. The day just feels off, right? That's how you know you're in a routine, is when things feel not normal. Well, the routine has been broken, right? And you should be cognizant of when that happens, because it will maybe unintentionally affect you. For me, it affects me big time. And for those of you in my community, you know, if I'm not there to draw my lines at 8:30, there's a pretty good chance that I'm not going to be trading that day. I don't feel connected. I feel off. I feel like the routine's not right. And I accept that, hey, you're not doing what normally works for you. Maybe don't push it, okay? So, also part of your routine should include your trading hours, guys. You know, if you watch me or you trade with me, I don't trade after 12 o'clock. How did I come to that decision? It's not because I'm trying to not work. It's because that when I started to journal, I realized that after 12 o'clock, my win rate drops below 50%. So having journaling as part of my trade plan caused me to realize what's not working. And instead of fixing that by trying to figure out how I could trade more, I said, well, let me think about this. My win rate in the morning or up till 12 o'clock is north of 90%. And then after 12 o'clock, it drops below 50%. How can I make this work better for me? Oh, I get it. Do less. Stop trading after 12 o'clock. Instantly, my win rate got to stay at 90% or better, and I didn't have to stress about what was going to happen later in the day or sit in front of the computer later in the day, which is the ideal goal for every day trader, right? Nobody wants to sit in front of a computer 8 hours a day, right? That's not part of your trade plan. Wouldn't you rather get in, make your money, and get out and then go live life? Because that's probably the biggest return you can get from becoming a consistently winning trader is time, guys. You're freeing up time. That's the whole point of all of this. It's not the money. If you chase money all day long, you'll chase it till you die. Okay? Then you have to make time as part of your routine to review what you did during your trading day. Whether your trading day exists on your lunch break or before you go to work or when you come home from work. Guys, I'm just telling you what worked for me and what didn't. If you can only trade later in the day, that's fine. And as long as you define your trade plan based on that time frame, you'll be okay. My trading style does not work well after 12 o'clock. I would have to move to next day expirations, which if you trade SPX, you know how expensive that is. And, well, you got to be ready to move with everything else that we look for when you make those trades. That's it. Okay? So, quickly, I'm just going to give you the bullet points if you just got here. Number one, you have to make a trade plan. What should be in that trade plan? Your strategy. Obviously, I know it sounds obvious, but a lot of people are out there trying to trade anything because candles are moving with no real strategy, right? How many of you out there are just taking trades because of 12 different things? I know I help Christine. I love you if you're out there. Several people out there are trying to pay attention and focus on too many things because they're trying to maximize the number of trade opportunities that they could take. Guys, that's not a good thing. That's not a good thing. Whatever your strategy is, there are 100% going to be several more opportunities than you know of throughout the trading day. Please don't chase your tail trying to trade 7 different strategies at the same time. It doesn't work well because what ends up happening in that situation is you end up mingling multiple strategies together and you're going to say, well, this strategy says I should get in here. So I'm going to get in here, even though this strategy over here would say, yeah, no, don't get in here. You will mesh them together. And then you find yourself in a situation where you're not really winning consistently and you won't know what to put your finger on as to why you're not winning consistently, right? You have to know and you have to stick to your trade plan so that you can go back and say, okay, this is my plan. I'm following it to a T and I'm still taking losses for whatever reason, right? You're going to lose on everything at some point. No strategy works 100% of the time, but you can start to figure out whether it's time-based, whether you're buying in too late to your trades, too early on your trades, which you would know because emotions are part of the trade plan that you got to keep in check, whatever. So define your trading strategy. Select what it is you're going to trade. That's number 2. Number 3, establish your entry criteria. Number 4, define your exit criteria. Number 5, determine your position sizing. 6, create a trading journal. And number 7, include a daily routine. Okay, that's what your trade plan should include. Your trading style, i.e. your strategy, whatever it is you're going to trade, Forex, futures, options, it could be anything, right? Stocks, establish your entry criteria, establish your exit criteria. Your position sizing should be part of your trade plan. That's number 5. Number 6, a trading journal. And number 7, create a daily routine. Okay. And the last thing I'm going to give you is a couple of tips on how to progress, because this is overwhelming at first, especially if you're trying to do this responsibly. It's very easy to jump in the stock market, guys, knowing nothing, right? I tell people all the time, knowing more is sometimes not better in trading, in the trading world, right? How many of you, and I'll give you a perfect example and then I'll give you these tips. How many of you are indicator traders, meaning you only execute when a certain indicators tell you it's okay to do it, which is fine. I don't do that, but that's not my trade plan, right? The problem is that at some point you will be waiting for so many things to tell you it's good to go that you'll either never find a trade to take, which becomes annoying and you become irritated and you become lacking discipline because you're getting impatient and you'll just force a trade anyway. Or you're going to rely on all these things and the trade still doesn't work out. And then you start to say, well, man, how many of you do that? How many of you trade indicators and your win rate really isn't what you want it to be anyway, right? It's crazy. But the indicators are there because of your personal feelings. You think that the indicators know more than you do. My job is to teach you that it's the exact opposite. You can do better than any indicator in the stock market. You can. I'm telling you, you just got to have confidence in yourself. And you got to know what you're doing. You could beat every indicator out there, hands down. The only one that is useful, in my opinion, is volume. And that's if you're trading and you already have your trade plan and all your things are in place. Volume is a good thing to know if that's part of your plan. But anyway, tips. Start simple, guys. Start simple. Begin with a basic trade plan and add complexity to it as you get better. So get used to writing down your entries and your exits and why you did it. Start with a trade plan that includes simple, basic information. If you're not going to use a software-based solution, right? Start simple because it will be overwhelming. You're going to have times where you don't want to do it because you're lazy or you had a rough day or you're tired or you forgot or whatever. It's going to happen. Life. So start simple, right? Start simple. Write down something. Make it part of your routine. Number 2. The benefit of having a trade plan is you get to test it before you waste any of your precious money, right? The beauty is, guys, we live in a world where we can trade with fake money or backtest things, even software-wise. You can define your trade rules and let a computer tell you how often you would win or lose. It's a beautiful thing. Doesn't have to cost you a penny. Test your trade plan before you do it with real money. I know it's not fun. It's not glorious. It's not glamorous. Because, God damn it, if I'm going to trade with real money. You don't like the side of it that comes at a cost. You only like the side of that plan when it makes money. Okay? Be specific. Okay? So part of the trade plan should be specifics. What I mean by that is everything that you do that involves a trade or even considering a trade should be considered before you take the trade. Basically, all the points we talked about, the 7 points, your entry point, your exit point, your strategy, and what you're trading, position size, all those things, right? And the reason that you need to be specific on that is because you might find that when you trade one contract, for an allotted amount of time, a week, month, you do just fine. Your win rate might be 72%. But you might find that when you went to 2, that your win rate drops to 60%, right? You might not attribute the fact that scaling up was part of that decline in your win rate unless you could see it in black and white. That's how I found out that trading later in the day was going against me. I had to see it with my own eyes in black and white. Jot the time of the trade, I took it, and then I started to say, wait a minute, there's a pattern here. After 12 o'clock, I don't win as often. Part of my trade plan. My trade plan got changed for the better because I learned that about myself, okay? Review your trade plan regularly because, as you know, your trade plan includes review time of everything you do every trading day, all right? Do it regularly. Make it part of your trade, whether it's with some scotch on the rocks or a cup of coffee or water or nothing at all. Make time to review your trading day. Treat this shit like a business, guys. Because if you own your own business, and if you're a business owner, that you will literally do what's ever necessary to maintain your business, right? When you're losing, you figure out where you're losing and you fix the problem. You got to do the same thing with trading. You have to. If you want this to pay you like a business, then you better treat it like a business. Okay, not a casino. And then last thing, and the most important, I would say, is staying disciplined. Okay, the trade plan should keep you in the bumpers. Like if you ever go bowling with your kids and they put the bumpers up, you can't fall in the gutters, right? Well, your trade plan should define the gutters for you, and you don't want to go in the gutters, right? You want to stay within your trade plan because as long as you're in that area, you should be expecting the good side of the trade, the bad side of the trade, and you will react accordingly, hopefully. Okay? Now, with that said, before I go off on any tangents, I do want to give you guys the opportunity, because we've been on here for 45 minutes, to ask me any questions that you may have regarding the topic. Guys, if we have a Q&A, just an open Q&A, we could do that another day. But for today, does anybody have any questions regarding a trade plan, what they feel should or shouldn't be included in it? Or, I've laid out everything I know that should be a part of it. And I don't know if you're doing all of them, some of them, none of them. But does anybody have any questions regarding trade plans at this point? Okay. If not, then there's not much more to talk about. Do you have written trade plan or a template to use? I don't, Mike, but you know what? I will make one. I will make one for you. I stopped journaling my trades, guys. My YouTube videos that I make every day become my trading journal because I have to review the chart, and it just becomes my trade plan. Now, I've been fortunate enough to become a profitable trader, and I know what works for me. In fact, I get asked all the time, Jimmy, when are you going to scale up? Jimmy, when are you going to hold your trades longer? Jimmy. Listen, guys, from somebody who just 4 years ago was living paycheck to paycheck. I never dreamed of the day that I would not only be working half days, right? I work essentially 15 hours a week, and that's only because I'm there on the microphone past my work time. I make my living between 9:30 and 10 o'clock 95% of the time. I mean, I could literally work, what is that? 2.5 hours a week and pay my bills. But I'm on the microphone trying to help other people achieve the same thing until 12 o'clock every day. And the reason I'm not on there all day is because how am I going to teach you how to trade my strategy at a time that it doesn't work for me? But that's hypocritical. If I can't tell you to do something if I wouldn't do it myself, that's ridiculous, right? With a small account, so Brandon just asked, what's up, Brandon? With a small account, would you recommend a dollar stop loss or a percentage? Brandon, you're not going to like this answer, and most people don't. I live and die by support and resistance. So my stop loss is always defined by a level on the chart, not a dollar amount, not a percentage amount. And think of it like this. If you're in a trade, right? And again, I got in because we broke a support or we broke a resistance or, whatever. That's always part of my trade plan. I expect that support. So if I'm buying calls on a pullback to support, I'm doing so because I know that's where buyers are. I also believe that if we break through a support, we're going to continue down to the next support. So think about it like this. There is going to be some percentage between support A and support B that is random as hell. I know there's no buyers between those two lines. So why would you just stop out of a trade because of something other than a technical reason? Right? That's the way I look at it. So if you're taking your trades at the right time, then you have the luxury of knowing what should protect you, buyers, if you're buying on support. And if we close below that level, that's my stop loss. I hope that makes sense. Everything that we do, or I do, revolves around the chart. The chart is everything, guys. It's literally a treasure map. And if you follow the treasure map, it tells you where the danger zones are, and it tells you where the pot of gold is, our profit line. Trust me, the chart is king. It's everything you need, and everything you do in trading should revolve around the chart 100% of the time. If anything else is a reason you're taking that trade, then it's probably emotionally driven, not technically driven, okay? And for those of you who do trade patterns, cup and handle, trend breaks or head and shoulders, it's all support and resistance. All of it. What creates a head and shoulder is you moved up, you hit a level of resistance, you move back. You move up, you get through that resistance, it runs to the next resistance. There's your head. It pulls back. It tries to move back up to that previous resistance. You put in a lower high. There's your other shoulder. Guys, it's all buyers and sellers. You don't need to overcomplicate trading. I'm telling you, I have simplified this to a point where you literally can cut out everything that you're so used to being told that you have to watch and you have to use. Now, there's quite a few people in here right now that reluctantly remove their indicators from their charts and now have become more confident in winning traders. They're in here right now. I'm telling you. And if you're not in my room, get this book right here, right there. Is an awesome guy. He laid all of his thoughts down on paper, and everything that has worked for him and several other people are in that book. You can get it on Amazon. It's $10 for an ebook, or you can get it, paperback or hardcover. Right there. It's all there. Okay. Get the book, guys. Also, my second favorite picture besides the picture of my book, this is probably my favorite picture also. Consistency is everything, right? With the trade plan, you can get consistent, because if you're not consistently winning, then your trade plan might point out why you're not, and you have to adjust it, make changes to the trade plan, refine it. Don't blow it up and start. How many of you have tried trading one strategy, you gave it a day or two or a week, it doesn't seem to work for you, so you just move on to the next one? I used to do that. I used to chase trading strategies and indicators all day long, only to come to the conclusion that I wasn't implementing any of them properly. Right? You gotta look at that kind of stuff. All right, a couple more questions here. Well, I could. Kaven asked if I could cut this live up into shorts. Guys, I don't have a single short out there. I don't know what I would need to, what parts of this. I mean, I could use Opus, I guess, which automatically cuts it up. Oh, that's a good question, though, by the way. All right. Mine always starts out simple, then becomes more complicated over time. How can I keep it simple? I'm assuming you're referring to your trade plan, Alan. Let me ask you this. Why is it becoming more complicated? Is it because you keep changing it to improve your win rate? You see, most people are looking at the wrong thing when they're trying to correct problems or they're trying to make more money. For those of you who know me or trade with me, I always look for the negative side. Now, I don't do this in life. I always try to find the positive for everything that I do, I say, or that people I interact with. When I'm considering taking a second or a third trade, I don't look at it as, if I do this, I could make more money. I look at it the opposite way. I look at it and say, if I do this, I might give up some of what I already made. And that becomes the reason that I don't take multiple trades per day. Yes, I leave a ton of money on the table. Yes, I could make a lot more money if I continue to trade. But at the same time, there's going to be that one time that I assume that that's going to be the result, and then I end up destroying my wins for the day. It's not going to blow up my account. No trade I take ever will blow up my account. The fact of the matter is, it affects me emotionally, and then I will do something more likely stupid as a result of the new emotions that I felt because I gave up my profit and now I want it back. Okay, so how can you keep your trade plan simple? Stop adding things to it. If it's not winning for you, figure out why your trade plan is not working. Are you hesitating on your entries? Are you getting in too late? Are you staying in too long? Adjust your stop loss, because maybe you're somebody who's got a stop loss in place simply because it's a number or a percentage amount versus a spot on the chart. How many of you guys have been into a trade? It goes against you, right? So if we're buying calls, we get at resistance. That feels like the right time to buy calls. It's the worst time to buy calls, but whatever. Resistance holds, we pull back, and you literally sell out at what ends up being the bottom of the pullback, which happens to also be a support level, right? Now, if you're trading a percentage as your stop loss, you might be down 10% way before you get to the support. And so you stopped out, fine, you followed your plan. We end up hitting support, it bounces, and then it runs up after that. That's why I use the chart for my reasons for taking my trades, guys, and my stop losses. I make it more complicated to attempt to refine to avoid losses. You can't avoid losses. All you can do is have a winning, you can have a strategy or a trade plan and follow it to a T. If you follow any strategy that's out there properly, it should be a winning strategy. But the only thing that makes any strategy that's actually known, a known strategy, not work is you. It's your emotions. It's nothing else, because the strategy wouldn't be a thing if it didn't work, right? Head and shoulders. It works because it's a break of support. That's it. Or an inverted head and shoulders because it's breaking resistance. That's it. There's no mystery behind it. It's just how you're defining your setup for entry. And then the reason it works is because, well, statistically speaking, when we break a support level, especially on a downtrend, a head and shoulders breaking support when you're playing the shoulder side, you just came off of a lower high. We know that lower highs are bad for calls, and we're more likely to break support because of that. So of course, a head and shoulders is going to work more often than not. So it really, you got to make sure, Alan, that you are trading a strategy that does have a win rate. Try it paper wise. If you're getting different results doing it with fake money, then 100% it's being not a winning strategy with real money because of your emotions. And that's where the trade plan comes into a factor. You've got to adjust your position size. I tell people all the time, trade with a smaller position size. Trade with a dollar amount that you don't care if it went to zero. Nobody likes to lose money, but think of it like this. If you had a $10 bill in your pocket all day long and you got home at the end of the day and you went into your pocket, that $10 was missing. Is it going to ruin your day? If not, then that's a comfortable amount of money that you're willing to lose. However, if that's $100 in your pocket and you go home at the end of the day and that $100 is missing, you've exceeded your level of dollars that you're comfortable losing. That's how you have to go into your trade size until you become consistent. Okay. Try to trade every strategy that you're trying to learn with a dollar amount you're willing to lose all of. Don't let it go to zero, but you will find that it's much easier to trade the strategy in your trade plan to a T when it's with money that you're not terrified of losing. You have suggested an app or software you're using to analyze trades. Can you name it again? What is it called, guys? Is it TradeZilla? Trade. I don't know them because I don't use them, but there is one out there that impressed me it was super impressive because not only did it keep track, TradeZilla, not only did it keep track of everything that you did, it also reminded you, hey, on days that you trade more than this many times, your win rate drops significantly. That blew my mind, knowing I say that all the time, but knowing that there's actually software out there that's keeping stats of something that intricate. Trading less is more, guys. You don't have to believe me, but if you have TradeZilla, you will come to find that you will realize, I bet you, over time, the days you take more trades, the more often you will give up some profits, not add to them. I bet you. I don't know anything about TradeZilla, but I don't like to be a shill for things, guys. I do appreciate it, and TradeZilla, again, I don't even use it. I'm thinking about trying it just for fun, but I don't want. I'm not here to sell you on anything, guys. I'm trying to put knowledge in your brain because I want to see you succeed. I do, and I've been called every name in the book, in YouTube and in the comment sections and in Reddit and all the shit about how I'm just another guru. I'm out here to take people's money. I'm out here to sell books and sell products, and I make all my money on YouTube. I don't make shit from YouTube. My last payment from YouTube was $192. I make a video damn near every day, 20 minutes, 15 to 20 minutes long. I don't get paid shit from YouTube. I make $3 for every book that gets sold. $3. I'm not getting rich here, guys. My trading pays my bills. It's that simple. But I also know where I came from, and I want other people to not be where I was. As you know, if you know my story, I was in the darkest hole you can be in, right? Almost took myself out. That's how bad things got for me, not just financially, but a lot of other things. And I got out of it. And part of one of the biggest issues with me, as it was and is for a lot of people, is financial. It's financial, right? So I learned a skill that fixed a lot of my emotional problems or helped me get over a lot of my emotional issues and things I was dealing with. I deal with people every day, guys. People who are struggling financially, people who are struggling in marriages, in relationships, at their jobs. I'm not a counselor, and I'm not qualified to give financial advice or personal advice. I'm not a doctor. But I've lived all of the things that these people share with me, and I know what worked for me, and that's all I could talk about. It's not about me trying to tell you something that sounds good to you because it should work based on something I've read or anything else. Everything that I do, guys, is based on personal experience. Everything, because I don't feel comfortable recommending, talking about, or advising anybody unless I've done it myself. It doesn't make any sense, right? And that's exactly why when we're in the trade room, I don't tell you guys, hey, you should take this trade, but I won't. Why? Why would I do that? Or why wouldn't I do that? I wouldn't do that because, well, if I wouldn't put my money at risk here, why should it be okay for me to suggest that you do? I care too much. And it's a running joke in our community. I care too much about the people in my community. And I don't think that there is a way to care too much personally. I don't. And it affects me negatively. Oftentimes it's because I lose sleep when we have a bad day in our community. It stresses me out. I lose sleep. I grind my teeth at night. My wife knows when I'm stressing because she tells me, you ground your teeth all night last night. And I've come to find that I do that when I'm stressing about taxes, which I just found out what my tax number was 2 days ago. But I'm not stressing about it anymore. When we have a rough day in the community, when somebody tells me something that, is not the nicest thing to talk about. Man, I've talked people off the suicide ledge before, guys. I've helped people get through divorces. I've helped, I care. I just know what's on the other side of things if you don't keep them in check. On the depression side, I don't want anybody to ever go there. And I'll also be the first guy on YouTube to tell you who stands to gain, right? I gain by convincing you to pay to be in my community, right? I make your $65. I don't get to keep 65 of it because the IRS and platform fees and all that. It doesn't matter. And I pay my guys. But at the end of the day, it benefits me to lie to you and tell you, you should be here. You should do this. This is what works, and trade 1,000 times a day. But it benefits me financially, but not emotionally. And to me, the emotional side of life is far more important now than money is. So I'll be the first guy out there to tell you, if I believe this is not something you're going to succeed at, to stop paying, stop trying. Because if you don't, you end up in a place that you might not get out of. Okay. And that's the terrifying part for me. And that's why I'm very careful about what trade ideas I share, what I'm looking for, why my strategy is so cut and dry. I don't want there to be a gray area. I don't want it to be an emotional trade. How many times, guys, a lot of you guys are in here as my community members. How many times have I skipped out on a trade because we put in a lower high and I didn't buy calls on support, and then watch that support hole and it just takes off and turns into a banger trade? I have rules against that. So I try to stick to the rules. Part of my trade plan. What were the most important things that made you a profitable trader? I would say, and this is going to sound cliche, but it's the truth. If you haven't watched my baby account challenge video series, that's when I tell people I became a profitable trader. I was making money in the stock market before that, but I couldn't explain or teach how I was doing. It was basically going in big, quick, scalping. It was luck. I would jump into a huge call position because SPY was moving up. No technical basis whatsoever. None. When I came back from my depression state and I started the baby account challenge, okay, I did that for a lot of reasons. We won't get into why, but at the end of the day, that was the first time that I took every trade with intention. And then when people were asking me, why did you do this? Why did you do that? When I could answer those questions is when I realized that I was trading with a trade plan, right? That is when I became profitable. I became more profitable when my confidence grew, and my confidence grew because I was consistently starting to win. You're never going to get rid of losing trades, guys. I have a lot of green days, but throughout those green days, I have some losing trades, right? I only track my green and red day, not the trades themselves. Because at the end of the day, what I make at the end of the day, I need to make at least $500 a day to pay my living expenses and support my family. And that's what matters to me. It's not whether I made double it, triple it, or the only time it matters is when I make less than it. Now, fortunately, I have much better green days than I do red days, and I exceed my profit target almost every day, so I can afford to take a red day. It doesn't stress me out, and that's the other thing. Once you find the consistency, it becomes easier to trade, right? I've grown my account to a point where if any of my trades went to zero, I would be irritated. I would be annoyed that I allowed it to happen, and I lack the discipline to even allow that to be a thing. But my account balance will be, I would probably barely notice it if you took that amount of money out of my account and then I woke up the next day and looked at my balance. The account size, when you've earned it to be that point, I didn't start with the amount of money that's in my account. I started with $37 in the account that I trade today. $37. And it's still, if you do watch the Baby Account Challenge, JWD, that same account is what I started with and what I currently trade to this day. Jamie, I love it, man. You are somebody I pay attention to all the time. Thanks for the chat, Jimmy. My green weeks are more often, and a trading plan is the most important thing that changed my green loss ratio. I'm telling you guys, and the reason the trade plan is so important, it's not just because it defines your rules for everything that you do in the market, and you need to stick to it, by the way. We will deviate from the trade plan. How many of you guys have been in a trade, winning or losing? You know where you want to go to take your profits. You know where you're supposed to stop out. And in either case, when we get to one of those 2 points, you don't take your profits or you don't stop out. And instantly, that feeling of uncomfortableness sets in. Even on the good side of trades. That's because you made a conscious effort to deviate from your trade plan. You probably have a trade plan that's not written down or well-defined. And you'll know when you do something you're not supposed to and you feel it. That's why if I deviate from my trade plan, for those of you who are in my room, you know when I'm in a trade, you know where my profit target is. And I tell you guys, this is one I'm going to hold through my profit target because of this, and this, but I won't do it without putting a mechanical stop loss in place so that I can lock in the same profit that I would have had I just followed my original trade plan. Okay? So you know when you're deviating from what your plan is, even if it's not a written down plan, I would recommend that you write it down. And who was it, Mike, I think? I will actually create a trade plan, and I will make it, I don't know how I'll get it to you guys, but maybe I'll make a link to a Google Drive or something like that, that you can download and edit to fit your and suit your needs. Okay? I'll do that. I promise. I'll try and get it done this weekend, as a matter of fact. Does anybody else? Caven. How many trades should somebody backtest a strategy to see if we have a high win or loss percentage? You could probably do it over the course of 30 days, 20 trades. I mean, the larger the sample size, the more accurate the win-loss ratio will become over time. I mean, because you could start a new strategy today and it wins the first 3 times. It's not going to be a 100% win rate strategy at the end. So the larger the sample size, the better. If you're going to do it yourself, then I would say you'd probably get a good solid number after 1 month of trading. But the key is when you're going to backtest these things, guys, is you've got to follow the plan 100%. Because when we deal with this all the time, you can't bend your rules. If you watch, I think it was yesterday's video, you guys have to have defined rules and you have to follow them 100% of the time. If you don't, you'll reward yourself for breaking rules on the times that it pays you more, and you'll learn to say it's okay to break rules on the losing side of trades too, which is the dangerous part of it. It's okay to break rules if it means you're going to make more money. Not okay, but in our heads, it's great. But when we break rules enough times to where they become expendable, when a trade goes against us, then all of a sudden the same rules don't matter anymore. And then that's when we take the big hits to the downside. And then it destroys your progress, guys. And progress is measured not in money. It's measured in your consistency and your confidence. That's what you're trading every day. You're trading your confidence level until you've earned consistency. When you are consistent, your confidence is already high enough, and then the profits follow. The money is a natural result of doing this the right way, guys. It's never the reason you are doing it. I hope that makes sense. If you do this the right way, the money follows. That's the natural result of trading the proper way. So don't chase the money. Chase consistency. Okay? Does anybody else have any more questions? We've been here for an hour and 10 minutes. I have nothing to do until 2 o'clock. I got a soccer tournament to go to with my daughter. But does anybody have any questions? Alan says, I broke my confidence on SPX and have gone down back to one SPY contract to do it the right way. Alan, you're obviously, unfortunately, in plenty of company. A lot of people out there start too big too fast. Not that you did, but there comes a point. I'm there now. I have no interest, none whatsoever, in scaling beyond where I currently trade for several reasons. Number one, it pays me more money than I need, right? I'm not a greedy person. I used to be greedy when I had no money because I needed the money. Now I'm at a level where I don't need as much as I make. Now I give fucking gobs of it to the IRS, but that's not the point. The fact of the matter is I've gotten super comfortable. I don't want to upset that comfort. Scaling up, changing tickers, using a different tool for trading, that would upset the balance that I've come to find, and I'm not willing to do that. I can't afford to do that. Okay? I don't want to ruin my nest egg. I don't want to live, and I don't want to ruin my confidence. If you do, you have to go back to square one. But it's necessary. In my book, we talk about it's okay to scale down. So many people look at scaling back as being negative progress. And in a sense, it kind of is, but maybe it's because you progressed or tried to progress too fast and you shouldn't have scaled up in the first place. Okay? Please do not punish yourself in making yourself believe that because you scale back to preserve your emotions and your account, that that's a bad thing. It is not a bad thing. It's necessary. Okay? What is the benefits of trading options instead of futures? It's a great question. It's not really on topic, but I'll answer this real quick and then we'll wrap this up, guys. There's nothing wrong with trading futures. Okay. Options pay better, but it comes with certain pitfalls, I guess you would say. Both sides have their pros and their cons. Futures trading has become so big right now because of prop firms. Most of you guys would not be trading futures if you didn't have prop firms, because you wouldn't be able to, and I don't say this in a bad way, the margin requirements to trade real futures is very high for a lot of people, right? I think TOS, the last time I checked, is $12,500. That exceeds a casual trader's normal dollar amount. Okay. With that said, if I don't trade futures, and I'll tell you why. I'm entertaining the idea. I've traded a futures account. I had a $5,000 future account that I grew to $20,000 in a month. It works, but at the end of the day, no matter what you're trading, still requires the same discipline. There's nobody out there making money with futures lacking discipline that couldn't make the same money or better trading options. It all requires the same discipline. The downside for me to futures was that, and this is me understanding where my weaknesses are as a trader, I fall victim to the idea that because there's no theta on futures, that when a trade pulls back on me in futures, I immediately go to the idea that time is not a negative factor for me. So eventually my trade will work out. That's where I have a problem. Now, with prop firms, your drawdown kicks you out of that trade. I don't trade prop firms. When I was trading futures, this is my own money. So it could theoretically go to zero and way lower. That is a problem for me. The time factor. I like theta. I know it sounds crazy to say, but I actually like theta because it makes me have to make myself get in or out of the trade. Right? I don't trade later in the day, and theta is part of the reason. Right? I would have to change my trade plan in order to trade later because of theta. I'd have to use next day expirations, and I don't want to do that. Because what happens if I choose to use next day expirations? Say it with me. How many of you guys got into a day trade, meaning you got into the trade today? It wasn't what you hoped it would be at the end of the day, but because it doesn't expire till tomorrow, you hold it overnight. That's a problem for me. I have lost a fair amount of money holding trades overnight. It's exactly why I don't do it anymore. Well, if I'm trading next day expirations, I will be incentivized, for me, not everybody has this problem, to hold that trade overnight if it didn't result in a win by the end of the current close of the day. So there's pros and cons to both sides, guys. No matter what, it requires discipline and a trade plan. It doesn't matter what you're trading. Any meet and greets or gathering events coming up? It's crazy, but I want to do a Trading Decoded cruise. That's going to take probably a year of advanced preparation, and I keep saying we want to do it. I really should do it. It's not going to be something everybody can go on, but I think it would be amazing to get a good group of traders together. We could all hit the blackjacks tables together and actually be the gamblers that we really want to be in the markets, but on a blackjack table. What's my opinion about using VWAP? Listen, VWAP is good to know sometimes. The way I look at indicators in general is this. Having traded with indicators before, and again, please guys, don't hate me for this. I am not knocking anybody who uses indicators. What I will ask you to pay mind to is this. How many times, and this is a pro and a con, how many times has an indicator gotten you into a trade or out of a trade? Well, let's start with gotten you into a trade that ended up not working, or gotten you out of a trade that ended up continuing to work after you got out, or got you into a trade too late. Indicators, all of them are lagging. We're day traders. We're not swing traders. So lagging is not good. We're in our trades for minutes, not hours. I can't wait for a 15-minute candle or a 5-minute candle to print. I'm usually done making my money in a single 5-minute candle. So for me, indicators became a reason for me. It gave me something to blame if I took a trade that didn't work. And then I find myself relying too much on them. Indicators are fine as long as you're using them as supporting factors for your trade plan, not the reason to take your trade. As a trader, I would be willing to bet any successful day trader knows exactly what trade they want to take without a single indicator being involved in that decision making. Now, the indicator may support that decision. It may make it a stronger buy opportunity for them if volume is spiking at the time that the criteria on the chart is being met. So as long as you're using indicators as supporting factors and not the reason, because the downside to using them as the reason to take your trades is it also becomes the thing that you can continue to blame for the trades that don't work. If you can't look yourself in the mirror and say, yeah, I fucked up, I made a mistake and that's why I lost money, then you're going to walk around every single day and every time you take a losing trade trying to find something and somebody else to blame. Jerome Powell, Donald Trump, the indicator, the charts, the market makers, blah, 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 blah. Okay, we can't control the news. And yes, sometimes we're in a trade, news comes out and the trade goes against you. You can't prepare for that. You can't be ready for that. All you can do is have proper risk management in place, a stop loss, and hope that it gets triggered if that happens to you. But if you're taking a trade based off an indicator alone, when it doesn't work, the first thing we do is swap out for a new indicator. I've done it. You've done it. And I was speaking to you directly, but in general, that's the way it works. That's how we do. It's part of learning to become a trader. We don't become better at trading until we are willing to blame ourselves for why it's not working. Period. End of story. Nobody will convince me otherwise. And that's why trading's so hard. If it was technically based and nobody had emotions, we'd all be winning traders. I guarantee you. But because we're human beings and emotions are involved, that's why trading doesn't work for most people. We're emotional creatures, guys. And you'll never be able to turn that off. I'm very profitable and I have a lot of money in my trading account. And I still hate and I still feel nervous when a trade doesn't work out my way. I hate losing. It hurts. And if you didn't watch last Saturday's video, I learned something new. That the joy that is brought making a certain amount of money in a trade, the pain of losing that same amount is double the joy. Fascinating statistic. So if you make $100, how happy you are when that happens, you feel twice as bad if you lose that same $100. If it goes the other way, it's fascinating. What win-loss percentage should be the bare minimum before entering the live markets? That's a difficult question to answer because you don't have to have a high win rate if your risk to reward is good enough. Right? You can have a 2-to-1 risk to reward or 3-to-1 risk to reward and still have a 50-50 win rate. I don't look at risk to reward. I don't trade that way, so I can't speak on it. And my win rate is only high because I spend very little time in the market overall. I get in, I make my money, I get out. I don't keep pushing the envelope, guys. I don't. I just created a bot that now is starting to keep track of how many times over trading is not working for people. So as time goes on, we'll see, how that works out. Yeah, Paul. Well, I'm waking up a little bit more too. All right, I'll take one more question. Does anybody have any more questions? I don't want you guys are hanging in there. You're troopers, but I don't want to hold people up too long. We've deviated far from the trade plan conversation now. So, does anybody have one more question? If not, we'll wrap it up, and we'll move on. With that said, I am going to bid my farewells. Thank you guys for coming out here. I really appreciate your support in being here. My biggest concern and fear, as stupid as and silly as it sounds, is that nobody will show up to these. I hope you get some value out of these kinds of conversations. I do prefer talking to you guys about important topics when there's not a chart in front of us because there's no stress, right? There's no stress involved. I can take my time. I can articulate what I'm saying. I'm not frustrated. Dude, thank you for that. That's amazing. I appreciate you, Vimeo. That's you. So you pay as a member and then you pay in here. You don't have to do that, brother. I thank you a lot. With that said, enjoy the rest of your weekend, guys. I love you. I wish all of you to become profitable traders. I don't know if I have anybody here that is not a part of my trading community. If you're interested, this is a question that a lot of people don't know. The free trial, guys, it starts the minute you join my Discord server. You do not have to go anywhere or click any special links to start your free trial. I'm not turning this into a sales pitch, but I do get DM'd almost daily about people saying, how do I take advantage of the free trial? If it's your first time in my Discord community, it will automatically start the minute you join the server. You don't have to go through WAP. You don't have to put any credit card information in. Nobody asks you for any money. Speaking of which, if you do join my Discord server and you do get a DM from Jimmy, there's scammers all over the place, guys. I do not ask you for money, ever. The only money that you ever pay me is what is posted publicly anywhere, which is the $65 a month. I don't ask for crypto. I don't ask for nothing, okay? Just show up. Just show up. We talk about good, useful information all day long or every day that we're in there. I'm on the mic from 9 o'clock till 12 o'clock every single trading day. Okay. If you don't find value in it, then don't spend any money there. Please. I'm not selling you on me. I want to teach you how to do this the right way. And I say to people all the time, if I was able to, I wish I can get you guys as brand new traders before we've ruined our trading accounts or before we ruined our emotions, because I truly believe that what we do in here is different than every other Discord out there. It's not a toxic environment. I don't promote overtrading. I don't promote gambling. I think that doing less is more. And I would also say with certainty, because enough people have told me that my trading style is very easy to understand. The only reason it's difficult to implement is because of the fact that we have emotions. That's it. The strategy is simple. It doesn't require anything but your eyeballs and your fingers to click your mouse. That's it. I try and teach you how to trade that way because I think that less information is actually better. Because we've all been in a situation where we stay out of a trade because we've seen too much, or we take too many trades because, whatever factor is telling us we should. I'm telling you, statistics say that trading more than once per day oftentimes results in a lack of profit. Doesn't have to be a red day, but emotions get more and more snowball. It's a snowball effect. Your first trade ends up green, you become invincible, and you say, I can afford to take another trade because I'm green on the day, and whatever. You justify a reason to keep doing it. And if the first trade's red, nobody likes to have a red day. So what do? We trade a second time, emotionally driven, hoping to make the red day break even or green. And sadly, when we get to that point, if we get to that point, we feel a lot less stressed because we turn a red day green or break even. And that becomes the reason we take a third trade. It's catastrophic. I watch it happen all the time. I don't care who you are. You'll never be able to trade without emotions. But with that said, we're going to get off this topic, guys. You guys be good, be safe. Thank you for your support. I love you guys. For those of you who are in the Discord, I will see you on Monday morning. For those of you who are not, thanks for stopping by. I'll see you next Saturday. If you're interested in making a topic for this particular session type of thing, please just leave it in the comments here. I do read all of these comments and I do respond if I didn't respond to you verbally. So I will take your suggestions from there. When I have a couple of suggestions, which Lisa, by the way, this was your suggestion, I'll put it up for vote if there's more than one, and you guys will pick what we talk about next Saturday. Okay. So with that said, be good, be safe. Enjoy the rest of your weekend. I love you guys. See you.